release of next tranche. So the current budget estimates already reflect the overall IMF estimates and the expectations. So I think one major reading is that the current expectations, the current projections, particularly for revenue, looks very optimistic, and we haven't seen any significant steps which support that this target can be met, except for a few measures like PDL on oil. Otherwise, and energy, otherwise, there are no major steps. So shortfalls in IMF program would be very significant, because otherwise you can afford to miss your targets, the budgetary estimates, and can bank on the government borrowing through central bank to support the shortfalls. However, here, since we are in IMF program, first of all, in the first place, the over optimistic targets and any shortfalls in the revenue collection, along with that, an over allocation or under allocation on expense side would mean a significant squeeze on somehow different adjustment to be made, which naturally comes on the development expenditure, which has already been squeezed over the last 1 year or so. So at this stage, it is evident that government is focusing on meeting the IMF quantitative targets, which is positive, but given its significance for the external accounts. So I'll just not to mention that the overall expenditure side, the government has tried to maintain the discipline on current expenditure side. Defense spending, we haven't seen significant increased allocation. However, it is also falling short of the subsidies amount as well, where the government looks like has under allocated, and also on the other side, to support the economy, there are risks again that impact of Corona can prolong and cause more need for intervention in the budget, which again would put strain in the fiscal management. So we have been in tough economic environment for the last 3 years, and the current year was expected to be the probably the first year of economic recovery. 4.5%, 4%, 21 की expected थी, 3%, say 3% was expected for this year, but the current numbers indicate 0.5% contraction in the real GDP. Plus, along with that, over the last 2-3 years, we have already seen significant adjustment in the currency, significant hike in the interest rate cycle, because of Corona, COVID impact has been reversed to a large extent. And reforms that we have been seeing since the last year now looks like they have been like the government, again, given the challenging environment, the government has to stop pursuing a very significant discipline on that side. So external account, on the other side, fiscal challenges are there. The external account and foreign exchange reserves still look relatively reasonable. However, still in this budget, the government has made assumptions with regards to external financing, long-term loans, which would need to be materialized for the overall situation to remain intact. Now, with this overview, I'll just take a few seconds to start sharing my screen, so that you can see the presentation. Please just bear with me for a few seconds. Okay, I hope my screen is now visible to all of you, and coming towards the slide. Just give me a second. Okay, so this is just a review, cursory look of the major federal budget indicators. So government is eyeing a growth of 2.1% in fiscal year 21. After recording the contraction, we talked about a 0.5% as per the economic survey released in the last week, which was the first event in our after 68 years. and is a very significant event for an economy like us. And in particular, the backdrop of last 3 years where the economic growth has already been very slow. So this contraction and already in dollar terms, in real terms, there has been significant pressure on the economy. While globally, the governments we have seen have been pursuing aggressive policies in some cases where the combined direct and indirect impact and support to the economy has been reaching up to 30% of GDP. However, since our government, our economy does not have much space, so the local government has been constrained by the IMF program and worsening debt sustainability ratios because our national debt is now reaching up to 85% of GDP. The federal government is eyeing a total outlay of 7.1 trillion, which is meagerly up from the last year revised level, while I think about more than 10% lower than the initially budgeted level, while targeting a fiscal deficit of 7% of GDP. Obviously, there is an assumption with regards to impact of COVID and the economic activity in the ongoing year. So, as per our understanding, I think the budgeted is that we will be able to resume for the next from the second quarter to the normalized activity. Otherwise, there will be significant impact on the overall estimates. The contractionary nature of the budget can be ascertained from the fact that government is expecting a non-interest expenditure of close to 4.2 trillion, down 3.3% compared to last year. So which again we have seen the steps from the government, which again looks like that have been a requirement from the IMF program. So the provinces have been required to generate a surplus of 242 billion in fiscal year 21 compared to an expected deficit of 80 billion in the outgoing year. So these are in this table we have shown the major major headline numbers and their estimates for the fiscal year 21. And as you can see, 3.4 trillion is the fiscal deficit, and about roughly which comes to 7% of GDP after incorporating the provincial surplus. While another important takeaway from our angle is the funding of this fiscal deficit. So over the last few years, we have seen significant reliance on the domestic sources to fund the deficit. Last year, there was relatively healthy, but this year, a very relatively smaller amount expected in terms of external flows to support the overall fiscal deficit. So 2.2 trillion is expected to be generated from the domestic financing, which again has implications for the overall liquidity environment, and again results in continued crowding out effect on the overall business environment. Then this is just a comparison with regards to the government estimates, our estimates, and our estimates for the next fiscal year. So for instance, I'll just take GDP growth, which the government has kept at 0.4%, estimated at 0.4%. We have a history that our certain of our GDP numbers have been revised. In particular, growth number has been revised and we expect that given the impact of COVID on the already visible on the LSM indicator, which is showing a stark contraction. So this 0.4% for fiscal year 20 may be revised downward going forward as the estimates were to 1.2% of GDP, while in the next fiscal year we expect up to 2% GDP growth because of again lower base impact. Now the GDP in US dollar terms is about $258 billion. And again, if you look at since fiscal year 18 in dollar terms, our economy has contracted from $314 billion to $81 billion in FY19. Now this current fiscal year expected to be close to $259 to $60 billion, and then slight recovery in the next fiscal year on the back of relatively lesser currency depreciation and relatively stable, small recovery on the already a smaller base. So again, we have shared our expectations with regards to currency as well. So normalized level of currency depreciation is again expected because of relatively stable position on the external account and foreign exchange reserve. So on the following slides, I'll share the detailed estimates with regard to that as well. And then we have estimates for the real effective exchange rate. So we have assumed that State Bank would target a sub-par 100 or sub-100 value of real effective exchange rate. And that would mean that they would have to allow some room for currency depreciation. Coming towards inflation, the estimates where we have shown that in fiscal year 20, we expect the current year to end about an average inflation of close to 12%, while in the next fiscal year we are expecting close to 8% inflation. While the current account deficit is expected to be close to 12 billion, 2%, while foreign exchange reserves are expected to end the year at close to $13.8 billion. While we have shared our expectations for fiscal deficit, which I already talked about for this year, expected to be above 9%, and mind you, in fiscal year 18, close to 7%, 19 already 8.9%, and this would be the third year where and again in the fiscal year 21, again a very high fiscal deficit, which is alarming for the overall economic stability. And at current debt levels, this situation needs to be taken care of. If the overall economic situation worsens, then that can cause overall pressure on the overall financial fiscal system. Coming towards the tax targets, so the federal the target is about 21%, which is an environment with low economic growth, and with hardly 100 billion in new taxes imposed, the tax collection target seems improbable to be achieved, as it eyes a growth of rupees 1 trillion in absolute terms. So rupees 200 billion is being targeted from petroleum development levy, which implies about rupees 27 per liter of PDL will be charged throughout the year, with the oil prices rebounding near US $40. This seems to be a challenging task, as because when the oil prices rise up, and the government, because even in the next month we estimate that government would have to increase the oil prices by at least 12 to 15 rupees, and a continued increase would mean the government's ability, and it's without affecting the overall public backlash, would be difficult. At most, we see the tax collection to reach rupees 4.5 trillion. So we'll still be short of the overall tax targets by about rupees 500 billion. So in the table below, we have shown our estimates. In the first column, we have shown the FY19 actual numbers, then FY20 revised numbers, which shows the increase of nearly 25% in overall revenues and FDR revenues of 2%. While in FY21, we have shown the budgeted amount and our estimates. So we have incorporated slight decline or slightly lesser increase in the revenue. If you could compare about the tax revenue that is budgeted is close to 5.9 trillion. We are expecting, as I said, 500 billion less, so 5.4 billion there. And in the other hands, in terms of direct taxes, indirect taxes, so while the government estimates are nearly assuming 25, 26% and 30% increase, we have assumed about 15 to 20% increase based on the expectations and based on the assumptions that we have incorporated. Coming towards the next slide, as I've already mentioned that the civilian and military operations expenditure, while compared to, I think we'll cover that in detail. Assuming primary balance target now, given the IMF program, we have to be mindful of the flexibility available to the government, or the targets that government would have to meet, as you may have already noted. that earlier the IMF had given was expecting a primary surplus in this fiscal year before the COVID impact. However, because of the COVID, now since there is a revenue impact as well, plus along with the expenditure as well, so the revised primary balance target would be very critical, and I think that would be available with the release of the next tranche, would most likely with the July review, that we would know the exact primary balance, or maybe later on when the IMF program resumes in the October with the revised primary balance number. So we have incorporated the assumption of 0.5% primary balance target and 7% fiscal deficit. However, these two would require again a balance and impact on the overall development expenditures. So at this stage, I would request my colleague Obes to run us through the detailed numbers in this table, and again the implications for these numbers. Obes, can I request you to please, if you could just explain these numbers. I'll keep my screen sharing on so that
Sure.
you can reach the audience from here.
Assalamu alaikum and good evening, everyone. I hope my voice is audible and clear. So, Asim, can you move to the previous slide?
Sure.
Okay. So overall, I think the budget provides little impetus to the economic growth, and you know, it's the time when it's needed the most. The government is almost pressurized and constrained by the IMF program. So if you look at the several targets, tax collection targets, the expenditure targets, almost all of them are unrealistic. If you look at the tax collection target, they're targeting 1 trillion in additional taxation in the next year. And in percentage terms, that translates into 27%. So if you have a GDP growth of 2% and an inflation close to 7%, your nominal growth goes to 9%. And in such an environment, you can't have a tax collection more than 10, 12, or at most 15%. While we have assumed a tax collection of 15%, we think that nearly there would be a shortfall of around 500 to 600 billion rupees during the year. And what will happen when there would be a tax collection? Either there would be a mini budget down the road, or government would be forced to cut on the development spending. So if you look at the budgeted number of development expenditure, the government is eyeing a development expenditure of 1.3 trillion. But because of the tax shortfall of 500 billion rupees, we are restrained to a target of 710 billion, which is highly contractionary at this phase of economy, where the government needs to provide some impetus through development spending. It can't because it is forced by the IMF criteria. So either in 3 to 4 months, we will be seeing a mini budget, or IMF may be relaxing some of the conditions, because currently there is a condition of keeping the primary balance at 0.5%. So if IMF provides some relaxation, then government might target a higher expenditure, but without any relaxation or without any waiver, I think we are completely forced into a recessionary environment. Can you move on to the next slide? Okay, so that sums up what I was trying to say. You look at the tax collection target, what the government is targeting close to 13%, and we're expecting the tax collection to move up to 11.9%. Look at the development expenditure numbers. They are going to get reduced to 1.6% of GDP, which is apparently the lowest ever number in the last 20 years. During the last 5 years, I think that has averaged close to 3.5%. But for the next year, if there is a significant shortfall in tax collection, our development expenditure is going to be hurt badly. Then fiscal deficit again would be close to 7% because our most of the expenditures, they are very much fixed in nature. For instance, if you take the interest expenditure, they are close to 6.5% of GDP. So government has little room to maneuver the overall expenditure or to curtail the expenditure, and I think the X would fall on the development expenditure and development spending. One more thing to note down: if you look at the gross public debt to GDP ratio, it has moved to in a range of 90% from 70% back in fiscal year 18. And within the developing countries, I think we have one of the highest ratio, and this perhaps indicate that in the medium term, the government would be forced to increase the tax collection by imposing new taxes, or either secondly, the government would be forced to have to run a low economic growth over the next 2 to 3 years.
So this slide explains the challenging situation the government has. At some quarter, I have been saying that government should increase the level of support to the economy, should have run a higher fiscal deficit. However, if you look at again, it has to be seen in the context of the overall economic picture, because without pushing ourselves again towards a more risky scenario where overall economic stability can get hurt, this is not possible. I mean, we have already a high level of public debt to GDP ratio, while already been running significant fiscal deficit. And the overall revenue support, again, in this environment, the government is unable to expend its drive to increase tax revenue. So it's a really difficult situation for the government to manage as well. So they naturally have to resort to stability, to provide a more stability to the overall economic environment, and wait for either external inflows in forms of FDI or some other support, or the private sector or the overall exports to grow. Otherwise, this stalemate is likely to remain for some time. So this is the GDP growth review for fiscal year. The government expects GDP to contract by 0.4%. We expect contraction can be more at 1.2%, as the LSM numbers are showing a decline of more than 11%, while the government estimates incorporate, I think, about close to 8% GDP, 8% LSM decline. Since the and this estimate we had shown in our earlier webinar as well, post COVID, that there would be risk to the GDP growth expectations of this year, and again would have implications for the next year as well. Since the government has lifted most of the sectors from lockdown, we expect growth to remain in line with the government projections of close to 2% for the next year. Now, I think from the government policy, from their statements, it is clear that they are not likely to resort to significant or nationwide lockdowns from here, because of the threat of massive unemployment from the government's point of view, which takes precedence over other variables. However, the COVID-19 situation remains completely uncertain. In case if any lockdowns are imposed, our projections can naturally be revised downwards. Likewise, we expect global trade activities to normalize by the second quarter of the fiscal year. Any deviation from our implicit assumption can result in lower estimates on exports and remittances in particular, which can weigh on the overall economic growth. This table again shows the several estimates of GDP. So again, there is a wide deviation in the expectations of GDP growth for the current fiscal year, and almost near consensus for the next fiscal year. I think ADB is missing here, which has expected a lower GDP growth for fiscal year 21. But I think very hard to say without looking at how we go into the next year, on the lockdowns and the prevalence of COVID in the disruption of economic activity. This is just a slide that we showed earlier as well. Just to keep in mind, again, we are dealing with an uncertain environment. So this is the breakup of major sectors of our GDP. So what we have tried to do is that, again, assuming, वैसे crops पे भी now there is an impact of locust. Thank God कि wheat की जो crop है वो काफी हद तक उतर गई थी. Otherwise, there could have been a significant impact on there as well. But next year, के लिए, next crops के लिए, again, that remains a risk. But generally speaking, again, talking about COVID, we have tried to highlight. If you look at this summarized table, so this green shows about as a percentage of GDP, almost 40% looks like that would not be significantly affected. Similarly, in terms of employment, as per the previous employment survey, which is a bit old, about 45% is relatively unaffected of the total employment. But rest would get affected with varying degrees. In particular, most risky would be close to 12% and as a percentage of GDP, while 15% in terms of employment. And these sectors are here in the manufacturing. So we have assumed that mostly because of lockdowns, manufacturing gets affected, but depends on how the lockdowns are applied, whether the government lets the manufacturing activity continue and the retail outlets are basically clamped down, or the markets are clamped down, then that would mean different assumptions and different expectations. But just to put things in the perspective, we shared this assumption, this table. So now coming towards the external account, which again has implications for both our exchange rate and interest rate environment. We expect exports to fall by close to 7.6% during the current fiscal year. In the first 10 months, exports are down by 2.4%. So for the next year, we expect exports to slightly recover by 3.6% to close to $23 billion, which would still be lower than the pre-COVID levels. An assumption in this regard is that global activities will start normalizing by the first quarter of next fiscal year, while reaching its full potential capacity in the second quarter. While there would be risks again with the threat of now second wave emerging in some countries, that how they deal with and how the countries approach to that. Remittances are expected to clock in about $22 billion in fiscal year 20, which is up 1% on year-on-year basis. The impact is visible in the this month, while in the next month as well. During the 10 months, remittances are already up by 5.5%, while this month we have seen significantly affected. For the next year, we expect remittances to fall by overall 8% in line with the contraction in the global economy. Now, the recent fall in crude prices, although prices have recovered, but even assuming at $40, we would still be lower than the last year full average, which was in our understanding close to $55. So they will still be lower, and if it remains here, we will have a lot of cushion, and current account deficit will remain near 2% of GDP, which is below historical average. Foreign exchange reserves are expected to rise and improve from currently 10 billion to 13.8 billion by June 21. If again the assumption is that the government is able to secure the external financing that it has mentioned about. Now these are the estimates of major heads, and here you can see the details with regards to overall current account estimates. So in FY fiscal year 18 in particular, we were touching about close to $19 billion current account deficit. This year we are expecting close to 5 billion and again 5.5 billion in the next fiscal year, which in relative terms, relatively disciplined and relatively improved. However, again, coming towards the debt repayments, while there is somewhat uncertainty on the relief available to Pakistan, but until now, there is no significant relief that is available. And assuming again, taking the numbers from the government estimates, we expect there is about $16 billion gross external financing requirement in the next fiscal year, and about $10.6 billion in terms of debt repayments. So that again, assuming the usual heads in particular, where the government is looking at to finance this close to $16 billion, again $2.5 billion, almost similar levels to the last year, 2.5 from FDI, $2 billion from private sector loans. However, key assumption is this again, $4 billion, close to $4 billion expectations from the short-term loans, which would need to be seen, and about $1.5 billion in terms of sukuk, which here there is one silver lining is that over the last few months, while our euro bond rates or the emerging debt, international debt market was showing the stress due to COVID, has now eased up, and Pakistan's euro bond yield, which at one point went above 10%, I think was touching close to 11%, has now come off back to again we same range, 6.5%, range, which means that there is again an opportunity for there may be an opportunity uh, for the government to consider the Eurobond issue. So we have assumed that as well. And along with that, the normal assumptions with regards to Saudi Arab oil facility, and along with IMF support and multilateral support, uh, the overall foreign exchange reserves are likely to be higher. Currently, they are close to 10 billion. We are expecting $2 billion improvement by the end of June, while over the next fiscal year, about close to $1.8 billion or $13.8 billion reserves by the end of next fiscal year. So that means relatively stable position with regards to external account. As I said, there are several assumptions with regards to how the government is able to approach its external financing. So these assumptions of $4 billion of short-term loans, long-term loans, and Eurobond and the multilateral support would be critical to make its impact reflected in the current expectations. Now we move towards the inflation and interest rate outlook. So CPI for the current year is expected to average close to 10.7% against 6.8% last year, owing to the lagged impact of currency depreciation along with the rise in food inflation. However, with declining international crude oil prices, along with an expectation of stable currency, we expect headline inflation to ease off in the next fiscal year and decline to an average of close to 7%. We have assumed crude oil prices to average close to $40 billion per barrel for the next fiscal year. So that means if the oil prices move up, which for the time being, chances of which are less likely given the overall pandemic scenario and relatively slower economic recovery across the globe. So most likely this should not exceed to a very significant level from here. However, there would be implications again for both our balance of payment expectations, trade balance, and inflation assumptions, and again implications for the monetary policy. So until now, we have seen from the state bank swift action in terms of cut in interest rates. So they have already cut by more than 5% interest rates in this current year, in particularly over the last 2 months. We think now the interest rates have bottomed out, and there is very little room for interest rate to come down further. However, more than expected slowdown in the consumption can provide further room for the interest rate easing. So that would be a scenario where we see significant impact of COVID causing the significant disruption in the economic activity, requiring intervention from state bank and the government to arrest significant economic disruption. So now we come towards the key budgetary measures. So in terms of the overall market, I'll just summarize and will then request my colleague Ovesh to go through them in detail. For us, I think except for the construction sector package, which we had already seen earlier a couple of months ago, when the Prime Minister has announced the construction package. So most of these steps have been formalized or made part of the legal process now. And along with that, some relief has also been extended in terms of capital gain on immovable properties, which is likely again looks at that it is again an effort to support the package. so that the construction activity could get support. So apart from it, the most of the steps that have been taken or announced in the budget do not have a very significant impact on the stock market in particular. Similarly, generally there is we haven't seen any significant changes in the tax laws, either from the mutual fund investors perspective or generally from the capital gain or dividend rate perspective for the stock market. In terms of sectors details, I would request my colleague Avis to run through it. But generally speaking, from the stock market perspective, it is sort of a non-event kind of budget. Avis, can you walk us through it in detail by sector-wise?
Sure. So I think the overall budget remains a non-event for the capital markets and having little implications on key sectors. Asim, can you run through the key sector slide? The next slide. Okay. More or less, I think it's neutral for the major sectors, the heavyweights of the index. If you look at the commercial banks, super tax has been extended till fiscal year calendar year 21, which was already built in by the analysts. One key thing which needs to be highlighted is regarding the treasury single account. Now it's in the final stages, and it will have an effect on companies, on commercial banks, which have a major chunk of government deposits. So all public sector commercial banks, they are going to be negatively affected by this event. Primarily National Bank, Askari Bank, and Bank of Punjab if provincial implementation also goes on. Among the positive sector, I think cement is the only one which has got the construction package on hand. I think that can provide a short-term impetus. But overall, the environment also remains weak for the cement sector because the PSDB targets are going to get missed. Whatever the government is eyeing close to 1.3 trillion, we think there would be nearly a shortfall of around 400 billion in the PSDB. That is going to get negatively affected on the cement sector companies. One positive for the cement sector, the federal excise duty has been reduced by 12.5 rupees per bag. They were promised, I think, a 25 rupees cut, but it was finally, I think, reduced to 12.5 rupees. And apart from that, for the power sector, I think it's a big negative. The subsidy amount has been reduced to 150 billion for the power sector. Last year, for fiscal year 20, they have dispersed close to, I think, 260 billion rupees. So either our tariffs are going to go up by 20 to 25%, or the circular debt is going to get affected. So already the circular debt level is close to 1.8 trillion. If we account for the PHPL flows, it will, I think, further increase by 300 to 400 billion rupees in the next year. So it's a ticking, I think, time bomb for the power sector, and the government hasn't taken any measures to improve the flows for the power sector. Can you move on to the next slide, Asim? For autos, the government has imposed a federal excise duty on locally manufactured double cabin. Indus is going to get negatively affected because it manufactures Hilux. So they are going to become more expensive. I think they've already announced price increases. So already when we have a very weak demand for cyclicals, this is again going to get negatively for the sector. For the steel sector, they have reduced the regulatory duty on the imported HRC by 5%, but apparently that seems to be a non-event for local flat steel producers because they're already importing at concessionary rates from China because of the free trade agreement. So they are already exempted from regulatory duties. Apart from this, the government has removed the additional custom duties on several items, and scrap is one of them. So that is going to positively affect the rebar manufacturers, because they are currently paying close to 800 to 1000 rupees per ton on import of scrap. So the leading player in the listed domain, we have got Mughal, Amreli Steel, and Ittifaq. All have a positive earning impact of close to 20 to 30% on their bottom line. Uh, for fertilizer sector, it remains neutral, although they have reduced the subsidy amount by 14 billion rupees, but that is not going to affect much, because that is due to the lower oil prices. Um, Further, the government has allocated 10 billion for locust control. This is again going to be a neutral event, because it won't much increase the fertilizer offtake. For chemicals, among the listed players, again the impact is neutral. The government has reduced the additional custom duties on 90 different tariff lines, and most of them are chemical companies. But in the listed players, we have got Angro-Polymer, Lotchems, which are already exempted from additional custom duty. For textile sector, the government has not announced it has actually not continued the subsidized energy scheme, and this is going to this is going to affect them negatively. Apart from that, they have reduced the sales tax for retailers to 12% if they are integrated online with FBR, point of sale system. So that's slightly positive for Gul Ahmed Textile and Nishat Mills, which have got retail outlets all over Pakistan. Pharma is again one of the sector which is going to positively affected by the various measures taken by the government. The budgetary allocation is up by the federal government, is up by 100% to 25 billion. So that's one positive for pharma. Apart from that, they have allocated close to 70 billion rupees. This again bodes well for the pharma sector, because overall health spending would go up through this. And apart from this, they have exempted, I think, custom duties on import of raw materials on syringes and saline infusion sets, which are going to affect a few of the companies which are manufacturing either syringes. One of them is IVLHL. Within the miscellaneous domain, there are some other companies which are going to get positively affected. For instance, Nimar Chemicals, because the government has incentivized by reducing the rate of custom duty from 7% to 0%, which is a key raw material in manufacturing soaps. Apart from this, Unity Foods is also going to get affected positively, because the government has reduced the 2% custom duty on edible oils. And further, a few paint companies are also going to be positively benefit from this, from the measures. Okay, Asim, you can take over the presentation.
Thank you, Wes. So this sums up, I think, the reaction that we have seen in stock market today is just reflecting the expectations which were unmet in the budget with regards to in the last few days, while it was not expected in largely in the market, but for some quarters, we're expecting somewhat improvement in the capital gains structure to the stock market, which obviously didn't materialize. For cements, people were expecting maybe higher impact in terms of the FED and others. That also comes very low. And thirdly, I think with regards to banks, in the last few days, the expectations emerged, particularly after the State Bank of Pakistan shared its proposals for the budget, which included doing away with the withholding tax on cash withdrawals. And the backdrop was again with regards to increasing cash levels in the economy, and the state banks again focus was that this money should be brought back into the system because currency in circulation has been rising significantly over the past few years since this law was introduced, and since then the overall cash levels have increased. So there were expectations that if this liquidity comes back into the banking system, then can it help improve the overall banking balance sheet growth. Secondly, with regards to super tax, there were expectations which again in the IMF program, and again the government is already short of any steps to mobilize revenues. Obviously, this looks like a very difficult thing to achieve or expect from the government in this environment. So all in all, that is why I think that explains. And along with that, over the last couple of days, we have seen announcement from Mr. Asad Umar as well with regards to the expected impact of COVID in the economy, and the numbers he's talking about obviously are very concerning with regards to how they would pan out the economic activity and whether the government would go towards new or further lockdowns in the economy, which again has implications for the market. Because if you recall, our market has gradually recovered over the past 1 month or so on the expectations or on the developments that the government has started to open the economy. The business activity started, and again with regards to the again throughout the globe as well, because international markets have also performed very well on the expectations that this COVID impact is likely to remain for the very short term, and the economies will have again a quick recovery. So I think expectations with regard to economic recovery. So there has been a lot of debates. What would be the shape of economic recovery? Whether it's going to be a very slow curve, or whether it's going to be a quick V-shaped with the current clip we are going, and probably in the next few quarters, the economy will be back to normal. So this is what is driving the investors' expectations. In our case, given the economic challenges, it looks like that relative to global economy, again, their factors would be different. But for Pakistan, it looks like that we may have a slower recovery rate than the other economies because of the current fiscal side challenges from the government and the overall confidence in the economy. But again, that again would be dependent on how the COVID impact. That is our view is based on the current trajectory that we are looking at. So with that, with regards to our expectations and strategy. So as we have shared, we are not expecting any significant room for rate cuts. We think that rates are almost at the bottom. Any further cuts would be dependent on significant shift in the government strategy or the significant impact of COVID affecting the business environment. Right now, जो expectations हैं उसमें नहीं लग रहा, particularly while earlier we had a view that there may be a rate cut, but after the budget, especially when the government has shared its the external flow assumptions and the foreign flow expectations with regards to foreign funding and fiscal deficit funding, where again there looks like again would be contingent on a lot of factors. So program loans अपनी जगह पे हैं, जो government to government loans अपनी जगह पे हैं, but significant amount of short-term loans. That means government would have to remain very disciplined in terms of IMF program as well. Plus, I think with regards to overall fiscal position and the weak revenue side, again we may not be able to have much room towards the monetary side. Along with that, the equity market we have been discussing in the last three discussions. So we did a webinar a few weeks back post-COVID as well, where we shared our view that it does look like that the economic environment, since for the last 3 years we have been in continuation of very tough economic environment. So GDP growth has been low. Over the last 2-3 years, we have seen two big adjustments happen. One is on the currency side, where we have seen our currency, which was overvalued, has now been adjusted. So that one imbalance has been addressed. The second side is with regards to balance of payment, external account, foreign exchange reserves. That looks reasonable in the current environment. The concerning area which continues for the last 3-4 years is the overall economic growth and the fiscal side and the government deficit. So that continues to remain weak. And earlier we shared our view again with regards to the capital market expectations that by if we look at it from a distance, all the economic indicators. So there is a mixed picture in the short term. For instance, the lower GDP growth, the uncertainty with regard to GDP growth may hamper the expectations and sentiments in the short term. So our market may not perform significantly or may not show a very big rally in the short term because of these concerns. However, having said that, with the low interest rates, so 7%, 6%, 8%, that is the range of T-bill rates and the fixed income rates. So these avenues are available, which is very low return for a number of investors. And along with that, the overall liquidity in the system, in the markets has been comfortable. So we have not seen very high level of very high incidence of debt levels, very high outflows from the economy in terms of external account. Similarly, stable liquidity in the markets. So that is supporting that if there is any improvement in the outlook, whether it regards to COVID, whether it regards to the foreign exchange loans or IMF program की जो tranches हैं, because the liquidity is significant, is sufficient, so it will continue to chase the risky assets. And since long-term basis के ऊपर, valuations के ऊपर, equity markets look very attractive. So we shared several charts, I think about in terms of market capitalization to GDP, we are near record levels, about 15%, close to 15% of GDP, while we were on average have remained above 22%, while we touched a high of 45% back in 2008. So in terms of looking at the size of market, which has shrunk, which is already reflecting the stress in the economy, the long-term basis, the market looks to have incorporated a lot of stress already. It will perform, it will continue to perform because of the interest rates, if and when the clarity continues to emerge. That is why we have seen that even our stock market has shown a very strong recovery from 28, 29,000 trough levels that we have seen back in April and late March. Market has reacted very strongly to touch at 35,000. That is because of the overall liquidity and because investors have been chasing the risky assets. So market में भी यही होगा. That's what we expect. कि market शायद short term में नहीं perform करेगी, but जैसे ही ये थोड़ी सी clarity emerge होना शुरू होगी, थोड़ा सा COVID का impact लगेगा, because again it is a fact कि COVID related patients would continue to increase, incidence of number of patients would continue to increase. However, what market would be focused on is the impact on the industrial activity, economic activity, और जो हमारे overall financial stability के numbers हैं. For instance, हमारा balance of payment का number ठीक रहता है, external account का number ठीक रहता है, हमारी जो exports और relatively जो current account deficit के numbers आ रहे हैं from time to time, they continue to follow reasonable trajectory जो हमने expectations आपसे share की हैं. On the external side वो ठीक है, और once if they continue to remain so, I think market आहिस्ता आहिस्ता gradually उनके ऊपर react करके gradually बढ़ेगी. So this looks like not a market जिसमें you target that के index level को हम target करें कि what index level can be achieved. I think because market में stress बहुत ज़्यादा incorporated है, environment also remains uncertain. So rather than short-term targeting or specifying targets for the next 3 months or 6 months, you would rather look at this market as more from a long-term avenue. और environment हमें लगता है कि इसके लिए ठीक है, valuations ठीक है. Probably GDP and COVID impact के ऊपर जितनी clarity आती जाएगी, उतनी तेजी से markets perform करेंगी. In the short run, इन चीजों को हमें track करते रहना पड़ेगा. So we will continue to keep you updated. Your risky slide we just cover. The outlook of COVID, as I said, is still uncertain. We have assumed that economic activities to gradually pick up from next year and to attain the full potential midway in the next year. Any change from the expected outlook can significantly change our macro assumptions. And smooth run-off to IMF program will be a prerequisite. There is still a lot of uncertainty. I think October में शायद हमें नए IMF के targets मिलेंगे. in the next few months जो है वो probably because of COVID थोड़ा सा एक period आया हुआ है जिसमें IMF has given us relaxation, but वो दोबारा से शुरू हो जाएगा. Similarly, inflation expectations be are very sensitive to currency, utility, and oil prices. So I think till September the government ने दे दिया. So there is about I think rupees 2.5 rupees increase in tariff, electricity tariff, which is due. However, because of the COVID, the government may decide to defer this increase or let it be absorbed. अब उसके लिए that is why we were looking at जो current subsidy amount है does not seem enough to absorb that increase. So या तो government should announce that increase, वो भी नहीं लग रहा because of the COVID. They don't have the capacity or the flexibility in this environment to go for 20% increase in electricity tariffs. So they have to wait for things to get better. At the same time, they have not incorporated it in the budget. So उस side पे भी they would continue to be risk. Similarly, USD PKR, we have assumed around 170. 170, I think 2-3 rupees का room इसमें होगा, but इसमें कोई significant change आती है तो that can change our outlook. Similarly, political stability, which for the time being does not look like at risk, but again can affect markets, and global economic slowdown. I think it आज last दिन में ये जो चाइना और बीजिंग की दोबारा से expectations हुई हैं, that has raised the risk, plus global economies में भी जो second wave की बातें हैं वो significantly increase हो गई हैं. So what we are uncertain how these countries address it, because it looks like even in Beijing they have not locked down the whole Beijing, but जो meat market थी जिसमें ज़्यादा cases they have identified again, उसको उन्होंने close किया. So it looks like throughout the world small lockdowns or concentrated areas के lockdowns would prevail rather than locking down the whole economy, but again depends from market to market, economy to economy, और की strategies के ऊपर depend करेगा. So this sums up our review, and we have I think few questions. Looks like our presentation has been so comprehensive that there was no need for many questions. So I'll just come towards the question and answer session. So for the attendees, you can ask question if you want. You can post your question in the chat box, which would be appearing at the bottom of your Zoom screens or this session screen. So you can post questions through chat box. So the questions is about would you recommend further cut in interest rate for the next month, especially when the economy is worst hit by the pandemic? I think हमने अपनी expectations तो share कर ली है with regards to further cut in interest rate. देखिए recommendation of further interest rate cut हो जाना चाहिए, but the problem is that the government does not look adequately placed to address the vulnerabilities that will arise out of it. For instance, जो inflation expectations हैं, उसके लिए बहुत ज़रूरी है कि हमारे interest rates controllable range में रहें. So अभी जो हमारी expectations हैं for the full year, they are close to 7%. While for the next few months we are expecting कि वो 6% से नीचे होंगे, but for a very brief few months. So State Bank may consider this as an opportunity कि कुछ दिनों के लिए या कुछ महीनों के लिए they can consider the rate cut, but doesn't look like जितनी State Bank की body language लगती है, they look like that they are focused more on sustainable interest rate. So for the time being, it doesn't look like. अगर rate cut इनको करना है या rate cut किस सूरत में किया जा सकता है, वो उसी सूरत में किया जा सकता है कि external side ठीक रहे. So जो government की projections हैं उस पे ठीक रहे. जो गवर्नमेंट की ओवरऑल फिस्कल साइड है वो ठीक रहे, और पर्टिकुलर बिकॉज IMF प्रोग्राम में है तो आई थिंक IMF नेगोशिएशंस वुड कंटिन्यू टू बी अ वेरी इंपॉर्टेंट एलिमेंट. बट थ्योरेटिकली स्पीकिंग रेट कट होना चाहिए, सारी दुनिया में हो रहा है, बट आई थिंक पाकिस्तान और इमर्जिंग मार्केट्स का डिलेमा इज देयर वीक बैलेंस शीट्स व्हिच कैन नॉट बी डिसरिगार्डेड. सो वेयर यू सी डिक्लाइन इन इंटरेस्ट रेट्स, ये हमने डिस्कस कर लिया है डिटेल में. सो कुछ महीनों के लिए विंडो ओपन होती है, थोड़े से अगले कुछ महीनों के लिए, बट डजंट लुक लाइक कि स्टेट बैंक उसकी बेसिस के ऊपर करेगा. सीमेंट सेक्टर ओइंग टू एक्सपेक्टेड कट इन डेवलपमेंट एरिया. सो हमने ये भी डिस्कस किया बिल्कुल कि सीमेंट सेक्टर का आउटलुक या जो बजट के स्टेप्स हैं वो तो काफ़ी पॉजिटिव है विद रिगार्ड्स टू द फॉर्मलाइजेशन ऑफ एमनेस्टी स्कीम, विद रिगार्ड्स टू construction sector. That is positive with regards to demand in the cement sector. However, the important area would be कि COVID की वजह से ये जो activity है ये कब start होती है, that would need to be monitored and that would drive the expectations. हमारा वैसे outlook relatively positive है on the cement sector. We expect the cement sector में prices भी increase होंगी going forward. So, but again, economic activity, COVID, ये सब uncertainties रहेंगी. So foreign debt, position of foreign debt before and after new government came into power. I think ये मैं slide दोबारा से उसको देख लेता हूँ कि if we have mentioned on that उसके ऊपर obviously जी अवेश
जी तो इम्तियाज खान ने पूछा है फॉरेन डेट की पोजीशन since the government has assumed power. I think at the end of fiscal year 18 जो हमारा foreign public debt था that was close to $65 billion and the foreign public debt owned by the central government right now is close to $72 billion. So there has been a net addition of around $7 billion.
Thank you, Aves. फिर है जी, kindly explain positive and negative point with respect to mutual fund. If you're asking with respect to budget, so budget में we haven't seen any implications at the moment. ऐसी कोई चीज नजर नहीं आ रही which would affect our retail or corporate investors. At the moment, it looks like वो area has not been changed in this budget. Market might be risky on fear of second virus wave. Yes, I'm saying, as I'm saying, that this will, हमारे यहाँ तो second wave की जरूरत ही नहीं है. I think first wave ही एक pace के साथ continue हो रही है. उसका curve steep further हो गया है. So हमारे यहाँ तो वो tame down हुआ ही नहीं है. So but expansion ही आ रही है और second wave तो उन countries में आई है जहाँ पे किसी हद तक कम गई थी activities और control में आ गया था, but अब second wave हो रही है. पाकिस्तान के केस में तो वो I think continued because जो मिनिस्टर की स्पीच है obviously इसकी वजह से sentiments भी हट होंगे, but for the time being it looks like के क्योंकि गवर्नमेंट की स्ट्रैटेजी या कोविड पेशेंट्स तो बढ़ेंगे as I'm saying के वो तो उसका तो इंसिडेंस होगा ही और गवर्नमेंट की पॉलिसी भी नजर आ रही है कि गवर्नमेंट apparently लग ये रहा है कि does not want to wait for that long. They want कि ये चीज जो होनी है they are just letting it happen. और शायद उसका रीजन यही है कि we cannot afford to go for lockdowns. So strategy depend करेगी गवर्नमेंट की if they go for significant lockdowns of industries. ये कुछ areas को बंद कर देना या कुछ cities को बंद कर देना जहाँ पे industrial activity hurt ना हो, that is okay and that should not affect the market and the corporate earning expectations. So that should be okay. However, if industrial production, exports, इसमें disruption आती है, then that could affect the market sentiment. So 100 billion expected from the privatization. Can you name the pipeline projects for privatization? I think projects तो identify नहीं हुए, but जो पिछले सालों में जो projects की list के ऊपर रहे, उनमें एक तो LNG के power projects हैं, जो कि I think $1.5 अरब की expectations उनकी पहले भी थी, वो भी हो सकते हैं, plus कुछ इन्होंने हम स्टील मिल और उससे तो कुछ एक्सपेक्ट नहीं कर सकते, बट कुछ इन्होंने एक्सपेक्टेशंस रखी थी कुछ गवर्नमेंट होल्डिंग्स की, कुछ कैपिटल मार्केट में जो ट्रांजैक्शंस हैं उसकी, बट स्पेसिफिकली गवर्नमेंट ने एटलीस्ट आई थिंक डिटेल में क्लियर नहीं किया. With fiscal deficit 9% projected to be 8% next year, how will rupee remain at 170? नदीम साहब, ये आपका सवाल ठीक है कि जब हायर फिस्कल डेफिसिट होता है, theoretically speaking, that means कि उस फिस्कल डेफिसिट को अगर डोमेस्टिक सोर्सेज से फंड कर रहे हैं, so that means कि you will be printing more currency. And in the current environment, एक तो 3-4 मोटी चीजें हम quickly recap कर लेते हैं कि एक तो we are real effective exchange rate basis, we are close to 95 का rate. That means कि we still are not overvalued in theoretical terms. ठीक है, real effective exchange rate भी कोई exact science नहीं है. Secondly, जो currency printing है, that is not allowed in the current IMF program और अभी तक government stick रही है उससे. Government borrowing from central bank उसके ऊपर cap रहा है, उसके ऊपर allow नहीं रहा. So वो उसकी वजह से नहीं आता theoretical terms में अगर हम बात करें. And thirdly, जो balance of payment है, यानी अगर हम सिर्फ flow of dollar देख लें, वो हम एक्सपेक्ट कर रहे हैं नेट पॉजिटिव रहेगा. So while current account deficit is there, but if the government, as I said, government is able to continue funding that fiscal deficit through financial account, through borrowing, जो कि उनकी expectations में नजर आ रहा है. हमने अपनी जो expectations हैं उसमें incorporate किया है. Foreign exchange reserves net basis पे $2 billion से increase हो रहे हैं. Yet this is a one area where we will continue to be watchful because इधर information clearly नहीं available होती. In particular अभी जो swaps के numbers आए हैं उन्होंने भी थोड़ा सा हमारी expectations को change किया है. So वो number, but for the timing it looks like rupee पे ऊपर ज़्यादा pressure नहीं आना चाहिए, subject to they are able to borrow the amounts they are targeting और जो उनकी expectations में लिखा हुआ है, जो हमें लगता है कि ठीक होनी चाहिए. In the IMF program, because IMF program में again बहुत सारी जो budgetary expectations या projected loans होते हैं वो planned होते हैं या काफ़ी हद तक, especially multilateral agencies जो IMF से link होती हैं उनके काफ़ी हद तक loans जो हैं वो काफ़ी हद तक clear होते हैं. What would be the expected market level by the year end? I understand would be a range bound market. So we are हम जो expect कर रहे हैं वो कोई 39-40,000 करीब expect कर रहे हैं कि market वो trade करेगी. But as I said, probably ये one of the years I'm particularly not a fan of targeting a particular index level to ascertain the return potential in the market. Market की valuations में room काफी है. Market का index या prices का move होना would be because of sentiments, would be affected by the sentiments which are again affected by the COVID impact and the with debt to GDP at 87%, why will we not become Lebanon in 1 year? So overall economics.
मैं आंसर कर दूं इसको.
जी sure.
ओके, नदीम साहब ने सवाल पूछा है हमारा डेट टू जीडीपी एट 87%, व्हाई विल वी नॉट बिकम लेबनान. हमारे नदीम साहब थोड़ा सा डिफरेंस है. एक तो लेबनान का करंट जो डेट टू जीडीपी रेशियो है दैट्स नियरली डबल द रेट ऑफ आवर्स. इट्स क्लोज टू 160% ऑफ जीडीपी. तो एक तो इतना ये इसमें फर्क है. तो उनके जो ओवरऑल इंटरेस्ट एक्सपेंडिचर्स हैं दे आर फार मोर हायर कंपेयर टू आवर्स. और दूसरी चीज आई थिंक इफ यू लुक एट द करंट बजट उसमें एक थोड़ा सा फिस्कल डिसिप्लिन हमें एटलीस्ट एक्सपेंडिचर साइड पे नजर आ रहा है. जैसे फॉर इंस्टेंस दे हैव फ्रीज ऑन द सैलरीज ऑफ द सिविलियन एंड मिलिट्री रिजीम्स. सब्सिडी कम कर रहे हैं. मे बी डेवलपमेंट स्पेंडिंग भी इतनी बढ़े ना और IMF प्रोग्राम के अंदर है. तो एज लॉन्ग एज आई थिंक इफ देयर इज सम सॉर्ट ऑफ फिस्कल डिसिप्लिन ओवर द मीडियम टर्म शायद इससे निकल जाए. बट अगर कोई फिस्कल डिसिप्लिन नहीं रहा और इसी तरह फिस्कल डेफिसिट कंटिन्यूअसली क्लोज टू 10% रहे तो फिर देयर इज नो डाउट कि ओवर द नेक्स्ट 5 to 10 years हम लेबनान ना बन जाए. तो इट डिपेंड्स कि आप मीडियम टर्म में क्या करते हैं और कितना फिस्कल डिसिप्लिन दिखाते हैं. एंड तीसरा द फोकस ऑन इकोनॉमिक ग्रोथ, बिकॉज ये जो डेट टू जीडीपी वाले क्राइसिस से हमें इकोनॉमिक ग्रोथ ही निकाल सकता है. Last time back in 1990s, debt to GDP was close to 70, 75, 80%. तो उसके बाद भी आई थिंक मुशर्रफ एरा में जो इकोनॉमिक ग्रोथ आई थी उसकी वजह से दोबारा हमने डेट टू जीडीपी अपना कम कर दिया था. तो इट ऑल डिपेंड्स कि मीडियम टर्म में हमारी ग्रोथ कैसी रहेगी, फिस्कल साइड पे किस तरह का हम डिसिप्लिन दिखाते हैं. अगर वो चीजें इंटैक्ट रहती हैं और डिसिप्लिन वहां पे नजर आएगा तो इंशाल्लाह होपफुली हम लेबनान नहीं बनेंगे और एटलीस्ट 1 साल में तो नहीं बनेंगे.
So economic stability would be very important. Why mutual funds are, if I say yes, why mutual funds are major seller in today's market? I think mutual funds तो obviously reflect करते हैं पूरी इंडस्ट्री को. There are several, और actually mutual funds की अपनी एक्टिविटी जरूरी नहीं है कि वो for instance, any investor is redeeming from mutual funds, so mutual fund manager would be forced to sell and return back the money to the investor. So some investors, as I said, were expecting that there may be positive steps in the market, so they may have gotten disappointed and may have thought that probably since they are disappointed, they have decided to take action. But generally speaking, disappointment the market में नजर आई थी. Is there any chance of corona-like super tax on companies earning good in future? गवर्नमेंट के ऊपर प्रेशर तो है, रेवेन्यू का भी प्रेशर होगा IMF प्रोग्राम की वजह से. और अभी इतनी डिटेल्स क्लियर नहीं है कि इनका जो क्वांटिटेटिव टारगेट है इन टर्म्स ऑफ प्राइमरी डेफिसिट या फिस्कल डेफिसिट वो वो कितना होगा, हमने जो assumptions दी हैं वो शेयर किए आपसे 0.5% और 7% फिस्कल डेफिसिट की, बट अगेन उसमें भी कुछ assumptions हैं रेवेन्यू टारगेट के अचीव करने। सो रूम रहेगा, रिस्क रहेगा कि गवर्नमेंट हैज टू कंसिडर सम स्टेप्स, बट लुक्स लाइक के शायद बहुत ज्यादा कॉर्पोरेट टैक्स को ये कर ना सकें गिवन दी ओवरऑल चैलेंजिंग एनवायरनमेंट। Any change in CGT or withholding tax treatment? I think withholding tax की एक treatment में वैसे तो फर्क नहीं आया, chargeability और withholding tax के ऊपर I think एक clause है जिसको हम अभी देख रहे हैं, but looks like that will not affect mutual fund investors. एक तो सुकूक के ऊपर आया है कि जिसमें 25% टैक्स कर दिया for corporate investors. बाकी इसके अलावा एज सच कोई सिग्निफिकेंट चीज नजर नहीं आ रही फॉर म्यूचुअल फंड इन्वेस्टर्स। ये जो चार्जेबिलिटी और विद होल्डिंग टैक्स वाला एक एरिया थोड़ा सा ग्रे है जिस पे वी आर ट्राइंग टू सी क्लैरिटी, बट एट द स्टेज वी बिलीव म्यूचुअल फंड इन्वेस्टर्स के लिए कोई चेंज टैक्स में नहीं है। डू यू सी एनी प्रेशर इन इंटरेस्ट रेट्स बाय ईयर एंड और एज सून एज वी विटनेस अ लिटिल रिलैक्सेशन? आई थिंक अगर इन्फ्लेशन जो हम एक्सपेक्ट कर रहे हैं ट्रेजेक्टरी वो उसी तरह रही तो फिर तो जरूरत नहीं पड़ेगी, बिकॉज 7% के अंदर की इन्फ्लेशन वुड मीन कि 1% के करीब का रियल इंटरेस्ट रेट है, और विद दैट अगर सीपीआई कंट्रोल रहती है तो स्टेट बैंक ने ऑलरेडी कहा हुआ है कि जो करंट इंटरेस्ट रेट लेवल्स हैं वो रिफ्लेक्ट कर रहे हैं ओवरऑल एनवायरनमेंट को, एंड बहुत सिग्निफिकेंट अगर हमें नंबर्स चेंज होते हुए नजर आए तो शायद वो सिचुएशन, बट फॉर द टाइम बिंग तो लग रहा है कि इन्फ्लेशन यही होगी। फॉर इंस्टेंस ऑयल प्राइसेस बहुत तेजी से बढ़ गई, या हमारा जो बैलेंस ऑफ पेमेंट पोजीशन है उधर कोई बहुत सिग्निफिकेंट जो अभी एक्सपेक्टेशंस हैं उससे कोई चेंज आई तो फिर शायद हो सकता है। सो कैन वी एक्सपेक्ट मिनी बजट इन सितंबर और दिसंबर? आई थिंक एज वी डिस्कस्ड अर्लियर के रेवेन्यू के ऊपर फोकस रहेगा और उधर प्रेशर्स नजर आ रहे हैं, एक्सपेंडिचर भी कहीं कहीं फॉर इंस्टेंस हमने एनर्जी का डिस्कस किया कि उधर स्लिपेजेस हो सकती है। सो गवर्नमेंट प्रेशर में तो होगी, बजट को वो लाएं या किसी और तरीके से कवर करने की कोशिश करें, दैट वुड बी सीन, बट रूम रहेगा इसका। सो व्हाट अबाउट इंडेक्स जून 2020? अगर हम थोड़ा दिसंबर का कह रहे हैं कि थोड़ा सा शॉर्ट है और उसको जरा और व्यू से देखना चाहिए। आई थिंक वेरी शॉर्ट टर्म में तो सेंटिमेंट ज़्यादा ड्राइव करेंगे, सो हमें वो जो पुराने वाले इंडेक्स लेवल्स थे या जो मार्च एंड के ऊपर जो मार्केट गिर गई थी बहुत तेजी से 28,000 के करीब, वो भी नहीं लग रहा है। आई थिंक 30 से ऊपर ही रहेगी, 32 से लेके 36-37 की रेंज में लगता है कि इसमें मार्केट अभी रहनी चाहिए, बट दिस इज अगेन अ वेरी इट्स जस्ट अ गेस्टिमेट, इसके पीछे कोई वर्किंग कोई खास नहीं हो सकती, and short term I would rather refrain from giving you any specific target. So, and would you recommend sorry, last question. So today markets are 2 days on decline. What about the next day? Corona season में see mutual fund का portfolio क्या होगा? So next few days I think market अभी तो थोड़ी सी मिक्स ही रहेगी, कोई बहुत लग नहीं रहा, कोई पॉजिटिव चीज नहीं लग रही नेक्स्ट न्यूज नेगेटिव न्यूज को। और इंटरनेशनल मार्केट्स को देखें जो कि 2 दिन में नेगेटिव है, तो शायद कल भी लग रहा है कि छोटी मोटी नेगेटिव हो सकती है। कोरोना का हमारी पोर्टफोलियो एलोकेशंस क्या होंगी, सिंस वी आर ऑलरेडी टू मच इनटू पोर्टफोलियो, तो हम जो सेक्टर्स आपको बता देते हैं हमारी जो मेजर सेक्टर एलोकेशंस हैं। एक तो फर्स्ट ऑफ ऑल कन्वेंशनल फंड्स में वी फील, एक तो इस पूरी मार्केट में हमारे लिए एज यू वुड नो के जो हमारे ज़्यादातर सेक्टर्स हैं उनमें मेन कन्वेंशनल सेक्टर्स ही हैं, बैंक्स हैं, ऑयल है, पावर है, फर्टिलाइजर है, सीमेंट सेक्टर है। सो इन्हीं सेक्टर्स के अंदर जहाँ जहाँ हमें लगता है कि वैल्यूएशंस ज़्यादा गिर गई हैं या बिकॉज इन्वेस्टर्स हैव बीन नेगेटिव ऑन कोरोना, दे हैव पनिश्ड द स्टॉक प्राइसेस टू हाई। फॉर इंस्टेंस बैंकिंग सेक्टर हमें लगता है कि जिसमें वैल्यूएशंस बहुत ज़्यादा अफेक्ट हो गई है। हैविंग सेड दैट वी आर माइंडफुल के बिकॉज ऑफ द कोविड यहाँ बैंकिंग सेक्टर की अर्निंग्स में रिस्क हो सकते हैं, सो वी हैव अज्यूम्ड दोस एक्सपेक्टेशंस। डिस्पाइट दैट हमें फिर भी बैंकिंग सेक्टर में जो स्टेबल बड़े बैंक्स हैं वो ज़्यादा लगते हैं कि ठीक है। वैल्यूएशंस के ऊपर कुछ सीमेंट में जो कंपनीज व्हिच आर रिलेटिवली लेस लिवर्ड वो अब ठीक लगती हैं, प्लस इन टर्म्स ऑफ साइज ठीक लगती हैं। पावर सेक्टर में जहां वैल्यूएशंस बिल्कुल ठीक हैं, ऑल्दो वी आर माइंडफुल ऑफ के सर्कुलर डेट की वजह से लिक्विडिटी शॉर्ट टर्म में इनकी ठीक नहीं होगी, बट ऑन ओवरऑल बेसिस जहां ग्रोथ है, फॉर इंस्टेंस सबको जिसमें 2 साल बाद यहाँ से कोई अर्निंग्स में सिग्निफिकेंट इंक्रीज आ रही है और स्टॉक लग रहा है 3.5-4 times ट्रेड हो रहा है, that is too low and too attractive a valuation to consider on long-term basis. Plus, somewhat anchor in the portfolio from high dividend yield stocks in fertilizer, in some other stocks, in other sectors. In the food sector, थोड़ी allocations हैं, थोड़ी बहुत business sectors के अंदर allocations हैं. For instance, हमें कल अपने portfolio में एक बहुत अच्छा लगता है, जिसमें कुछ stability आ जाती है because of the overall portfolio as well. तो ये मेजर हमारी पोर्टफोलियो एलोकेशंस हैं। सिमिलरली जो शरिया कंप्लाइंट फंड्स हैं उनमें एक तो ऑयल एंड गैस सेक्टर कंटिन्यूज टू रिमेन हाई, फिर उसके बाद कुछ पावर फर्टिलाइजर सेक्टर और फिर उसके बाद छोटे छोटे डिफरेंट सेक्टर्स के अंदर है। बट हमारा जो वैसे एलोकेशन है जिन सेक्टर्स को हम अवॉइड कर रहे हैं वो अभी भी ऑटो सेक्टर है जिसको हमने अवॉइड किया हुआ है, उसके अंदर कोई सिग्निफिकेंट नहीं है। स्टील सेक्टर है जिसमें हम वो इतना खास allocated नहीं है। Similarly, other than a few names in the power sector, for instance, सबको के अलावा और कोई स्टॉक में हम ज़्यादा उस सेक्टर में एक्सपोज नहीं है। So any change in withholding tax treatment on BPS, I think ये वो सवाल है जिसको I would rather wait and would address you separately and later on, जिसको हम शायद अभी देख सकते हैं। Then buy the dips strategy would be helpful for Islamic stock investor or asset allocation fund would be good if investing for 2 or more years. Kindly also suggest which may perform better in Islamic, future Islamic stock fund or conventional stock fund. Okay, in terms of risk profile, obviously Islamic stock fund, pure stock fund is higher in risk profile. Asset allocation fund वैसे categorized तो same risk category में होता है, but again उसमें idea ये होता है कि fund manager would probably allocating less और थोड़ा सा fixed income की side के ऊपर move हो जाएगा. But from a long term perspective, I would rather prefer the Islamic stock fund, because if you believe that the stock market is so undervalued from a long term perspective, so you would want to maintain a core equity portfolio. Similarly, conventional versus Islamic, I think ये is very hard to say because Islamic stock fund की universe में oil का weight ज़्यादा होता है और oil stocks का या oil की movement का उसमें एक बड़ा element होता है. For the time being, it looks like जो recovery होगी वो तकरीबन, और historically भी देख लें तो कोई बहुत बड़ी deviation नहीं आती, directionally तकरीबन दोनों करते हैं. So rather than returns perspective, I would rather compare it from the belief perspective. Do you think default risk is increased? Sorry, इसका थोड़ा सा context आपको explain करना होगा. आप किस context में कह रहे हैं? Yes, generally speaking, जब economic conditions इतनी tough हो, तो generally incidence of defaults बढ़ जाते हैं. That is why we have seen the banking sector के stocks and they have been punished so hard. And जो इसीलिए हम अपनी भी जो lending है उसमें भी और जो investments हैं उसमें लेवरेज को एक इम्पॉर्टेंट कंसिडरेशन रख रहे हैं. एंड जो हमारी लेंडिंग है उसमें भी बहुत ही हाई लेवर्ड कंपनीज जिनके मार्जिन्स भी कंप्रेस हुए हैं, डिमांड भी कंप्रेशन हुई है, उधर ऑब्वियसली डिफॉल्ट रिस्क बढ़ गया है. सो दैट इज वन कंसिडरेशन. और इस एनवायरनमेंट में वी आर वेरी माइंडफुल. हमारी जो इवन जो फिक्स इनकम फंड्स हैं उसमें भी ये कंसिडरेशंस इस वक्त ज़्यादा हाई है, और हम बहुत सारे ऐसे रिस्की इंस्टीट्यूशंस को जिनको हम वैसे इससे पहले जब एनवायरनमेंट ठीक थी तो हम ठीक कर रहे थे, बट नाउ वी हैव बीन वेरी रिस्ट्रिक्टिव इन टर्म्स ऑफ डीलिंग विद देम. म्यूचुअल फंड इन्वेस्टर को अपना पोर्टफोलियो किस तरह मेंशन करना चाहिए, स्टॉक में कितना और इनकम में कितना? So I think you are asking from an individual investor perspective कि वो स्टॉक और इनकम में कितना रखे. I think ये थोड़ा सा personal financial planning का question है, and that I think should be based on excuse me, your wealth position, your risk aversion, your time horizon. For instance, if you are a very wealthy investor and have a long-term view and have the ability, that means have an ability to take risk. So you would want to maintain about more than 70% allocation in equities and 30% in fixed income. However, that depends on, as I said, is a function of how much wealth you have, how much risk you can take, and how much money you would not need to touch for the next, let's say, 5 years or so. And that's how the financial planning can be done. I think a separate session इसके ऊपर हो सकता है, इतने डिटेल में इसके ऊपर discussion हो सकती है. We'll look into that. I think that's, I have covered, with that, I have covered almost all the questions. If there is any further question, please reach out to us through either through our RMs or through our email IDs. You can write to us, Muhammad.asim@mcvah.com, or through our investment teams who are available to reach you. And with that, I would like to conclude this session. Thank you very much for patiently listening and attending to the session. Hopefully, this session has attended value. Thank you very much. Take care. Allah.